Welcome to The Explainer. Today, we're diving into the fascinating and, honestly, sometimes completely bizarre data coming out of PicksByOdds. We're going to explore this wild landscape where everyday people are allocating real capital, serious hard-earned money, on everything from your standard sports games to highly specific, super unconventional geopolitical scenarios. We aren't just talking about who's going to win a Sunday football game anymore. We are talking about crowdsourced speculation on the future of our world, tracked and measured in real time. It's like a giant puzzle, and the pieces are constantly shifting. Let's kick things off with a question that sounds like it belongs in some alternate reality history book, but is actually a live, actively traded market right now. Will the U.S. acquire part of Greenland in 2026? Now, you might hear that and immediately think it's a joke or maybe some fringe internet poll, but on prediction markets, this exact scenario is commanding a massive amount of attention. Almost $10 million. That is the actual, literal dollar volume wagered on that exact Greenland outcome. To put that into perspective, this obscure geopolitical question is competing directly with mainstream sports and massive crypto markets for human capital and attention. It really makes you wonder, what kind of unique knowledge or edge do these traders think they have to throw that kind of financial weight behind such an unconventional outcome? So, how do we make sense of all this? Well, we're analyzing data from PicksByOdds. Now, to be clear, this isn't a betting site itself. It's a platform built specifically for data-hungry traders, and it grounds these wild speculative bets in hard, objective data. PicksByOdds acts as a neutral aggregator. It tracks live implied probabilities, volume, and price history across 291 active contracts, specifically 150 markets on the platform Kalshi and 141 on Polymarket. It's essentially a pure dashboard of human expectation, cutting right through the noise of traditional news to show us exactly where people are actually putting their money. Section 1. Where the volume lives. Analyzing 291 prediction markets. Okay, let's dig into the macro trends here and see where the crowd's capital is really concentrated. You'd probably think politics and sports would steal the show, right? Well, actually, the economy dominates the space by a massive margin, with 117 active markets. And astonishingly, weather markets, like wagering on the specific temperature in Los Angeles or New York based on official NOAA data, sit at 38, completely beating out both politics and sports. This isn't just people rolling the dice for fun. It's individuals and businesses using these platforms to legitimately hedge against real-world environmental and financial risks. What's truly mind-blowing is when we look at the top markets by volume side by side. You have this crazy juxtaposition. Highly conventional sports markets like Philly playing New York, which is drawing about $10.6 million, are sitting right next to incredibly unconventional bets drawing nearly the exact same volume. Valtteri Bottas winning the 2026 F1 Championship sits at $9.8 million, and right below that are Greenland market at $9.7 million. Think about that for a second. Traders are applying the exact same financial gravity to a major city sports rivalry as they are to a hypothetical international land acquisition. Section 2. Tracking massive market shifts. Measuring human speculation in real time. Let's move on to how this pressure builds when we track velocity, because a sudden price change on these platforms isn't just a tiny blip. It represents a massive shift in crowd consensus. To really grasp this, we have to isolate the top movers. Take a market asking if Donald Trump will announce a lifted U.S. blockade of the Strait of Hormuz. It's currently trading at 10 cents following a huge 73-point plunge. That means confidence in this outcome absolutely cratered almost overnight, driven by nearly $1 million in trading volume. Right below it, expectations for the Fed funds rate dropped 45 points. These aren't just gradual, sleepy shifts. They are violent, practical recalibrations of what thousands of traders believe is fundamentally going to happen next. Now, just a quick aside before we go any deeper. It is absolutely vital to understand our lens here. When we analyze these markets, we are impartially reporting on the figures. So whether a contract involves Donald Trump or Marco Rubio, who, by the way, also has a high-volume market tracking his presidential chances, we are looking at them simply as live contracts driven by market mechanics. These are entirely neutral data points reflecting where user volume is flowing. We aren't taking any sides or endorsing any political viewpoints. It is pure, objective data analysis of crowd behavior and capital deployment. Section 3. The cross-venue arbitrage gap. Finding the edge between platforms. For the advanced data nerds watching this explainer, and I say that with total respect, pulling back the curtain reveals where the structural mechanics of these different platforms create absolute chaos and, for some, incredible opportunity. For the exact same event, Bitcoin hitting a specific price range on May 5th, the contract is trading at barely 1 cent on Kalshi, but a whopping 98 cents on Polymarket. This 97.9-point spread means a trader could theoretically take opposing positions on both platforms to lock in an almost risk-free profit. You literally have two entirely different crowds constrained by different platform rules, user demographics, and liquidity pools coming to completely opposite mathematical conclusions. It's fascinating. Finally, we've got to talk about the long shots. These are contracts trading under 10 cents that, surprisingly enough, maintain real, consistent open interest. We have Bitcoin reaching $1 million by December 2026, sitting at 1.8 cents. We have XAI building the best AI model by mid-2026 at 2 cents. We even have Xi Jinping winning a Nobel Peace Prize at 1.7 cents. These are highly improbable, true black swan outcomes, and yet, traders are steadily and quietly parking their capital here. Maybe they're hedging against the truly unimaginable. As we wrap up this explainer, I want to leave you with a rather provocative data point to chew on. When traders throw real capital at these extreme 1 cent long shots, what are they actually thinking? Are they simply gambling on a lottery ticket? Or is the crowd positioning itself for a massive asymmetric payoff because they are onto some underlying structural shift that the rest of us just haven't seen yet? It really forces us to ask, in a world increasingly governed by probabilities, what exactly is the crowd seeing that you might be missing?